Good afternoon, everybody. I'd like to welcome you to Kordia's annual public meeting, and thank you very much, everybody, for coming. And gentlemen, thank you for attending. I won't go and introduce everybody, but in the room you have obviously the board of Kordia, the senior executives. You have our auditor and our monitoring unit and guiding light from Treasury here, if you like. We'll run through a presentation. We'll do it reasonably quickly. And what I'd like to suggest at the end of it, we're very much open for questions. So you just keep your questions and we'll try our best to answer them and get back to you if we cannot. My name is David Clark. I'm Chairman of the Board of Directors. To my left is Sean Rendell, Group Chief Financial Officer, and Scott Bartlett, who's CEO of Kordia, and the three of us will be doing the presentation today. Okay. So I'd like to open first of all with a thank you. I'd like to first of all thank you all, my colleagues as directors and of course the senior executives, but very much I'd like to thank our customers and our stakeholders, particularly our customers. For us, without a doubt, telecommunications in the market we operate in is extremely competitive. Not only is it highly regulated and has different regulators from time to time and different market signals, it makes it interesting. We do have a very consolidated market with Vodafone and Telecom, and to some extent Chorus dominating various parts of our segment. And we are very, very grateful for all the customer support and all the business and all the suggestions they give us as we go forward, and they are an absolute critical element of our strategy. We aim to give them piece of value that is unsurpassed, and we attempt to do that. And you'll hear from the gentleman to my left and right how we do that and how we do it well. I won't go through the directors, but to inform you that myself and Debbie, who's there, this is our last meeting. So this is the last public AGM, and you'll have to put up with me. The next one, we're very fortunate to have Lorraine, who's taking over chair, and John Quirk as deputy chair. And I think that's critical, particularly for our stakeholders, because we have some challenges, I said before. The market is interesting, as I mentioned, but we also, I think I'm very pleased that we have continuity, and I thank the shareholding ministers in Comey for that. It's very critical because this is a complex business, and continuity is absolutely critical. So we can be assured at the governance level we certainly have great continuity, and I'd like to welcome our new directors when they both come on board in the very soon future. Now, for the financial year, I'll talk more about what the past is, and these gentlemen to my left and right talk more about the future. Ongoing performance of this business is now underlying significantly strong. We're very pleased with that, and as you know, and if you've read, we made a significant divestment in Auckland. There's several reasons for that. One of the reasons, of course, is that we believe we're better orientated towards the non-retail sector of the market. Yes, while we understand the retail sector, our strengths lie more in the broadcast and SME and business components, B2B. And we've got an extremely high track record of technology and technology solutions in matching that market. Retail sector, as you may be, we also have some issues with it, which we find interesting and challenging. It is highly regulated. You've got the debate as we speak today between the copper and the fibre. And that makes pricing, that makes going forward a little bit tricky and difficult. The other aspect to us, as I said before, it is dominated by two major players. Okay, it was dominated by three. Let's hope it doesn't consolidate any more than two. But it is extremely competitive out there. And of course, when you're in the retail sector, getting a share of voice and the share of mind and having the balance sheet to market very strongly and price competitively in certain sectors where you are can make life very difficult for the sort of 2s and 3s and 4s where we operate. So as you know, we sold Auckland. That was a great transaction for us. We're very pleased with the transaction. There's a small loss with the transaction, but it certainly was at a value that we think was extremely interesting. And we are at this point in time still providing services to Auckland Holdings Limited, its parent company, and we still believe that is exactly the right strategy for us. So our core underlying profit was boosted by 46%. Now, very important for us, we reduced net debt down to virtually in the last 8 years the lowest it's ever been. It did peak at 121 million. It's now down to around 50 million. That's extremely important for us. Why? We've had a strategy of deleveraging for some time. Now, one of the aspects of telecommunications business is that it is also highly capital intensive. Now, we work very hard at de-risking that. And while we make and used to make, I'll talk about Analogue Switch Off in a minute, around about 45 million, 40 million of EBITDA, we had a capital expenditure around about 25 million, sometimes 30 million. That's parts of our business, Auckland in particular, highly capital intensive. So we embarked, I think 5 years ago, on a strategy to very much reduce our core debt. And we're down to 50 million, and it's the lowest gearing we've had for some time. And of course, the difference between the 120 million and 50 odd million is attributable to increasing shareholder value. And I mean shareholder value, and that's very critical to us. And I'm very pleased also to report that we've managed to fundamentally return to dividends. In the last 2 years, we've paid a dividend, a core business has been profitable, and the gearing has come down. And that's very important for us, if you like. Now, one of the things that we've also been highly focused, as well as deleveraging, and that's also been a linked factor to the issue that we have no control about, and it's the analogue switch off into digital. And the fact of life is that, well, that's regulatory framework, which gives significant benefits to the Crown, by the way, which we can go into, and it's the right thing for the country. We were planning on a slightly different runway, but it is what it is. Fundamentally, we lose a third of our cash flow within 12 months. And of course, you realise that that's a difficult thing. Ergo, the need to deleverage. Okay, ergo, the need to actually look at their core assets, if you like, and that's why Auckland was moved on. We believe we are now ready with other lines of business to fundamentally meet the analogue switch off, and be prepared and be capable, and a significant cash generation to well move through that. It means this year will be difficult, and we're aiming, there'll be a component of write-down this year and a component of loss of some of the businesses. You don't lose a third of your cash flow and not have some challenges, and that's fine. And we're very much prepared for that. We plan for that, and the Crown and our shareholders are well aware of that fact. The trajectory out of that is very strong. Australian business, as you know, is now probably the biggest component of business. Australian businesses got some significant positives. As you know, the Australian economy is extremely big. There's a little bit more diverse over there, and one of the things we've tried to do with the Australian business is diversify outside the traditional telco. Telcos can be, when you contract to them, extremely price sensitive and price hungry. The margins from time to time can get lower and lower, and therefore we're constantly worried about diversifying our platform across Australia. We've done that now. And one of the sectors we've entered into is the energy and resources sector. And you may have read that we now have a contract, revenue, $100 million contract for supplying one of the biggest LPG expansions in Australia, and that project's underway, and it'll bring significant cash flow. It is, however, a volatile industry, and as you know, in the Australian contracting industry and various sectors like that. Again, there is regulatory environment in Australia, there is NBN and various other things over there. You've got to be cognizant of those factors as well. The thing about some of the technologies is it does expand. There is a significant investment in 4G technology, and as we're very strong in mobile design capabilities over there, we're very well positioned there as well, if you like. New Zealand business itself, as you'll hear from Scott, is very solid. It is restructured. It is ready for Analogue Switch Off, and we're very pleased with that strategy. And as you'll see in the results from 14 and 15 and 16, we've now built a very sustainable business, which is one of our objectives. So I will now pass on to my colleagues, and it's probably going to be the colleague to my left. Well, no, it's not. Right. All right. Your left. I meant to say your left.
Your left. Good recovery. Well, thank you, David. And again, I'd like to extend my welcome and thanks to all of you for joining us this afternoon. My name's Scott Butler. I'm the Chief Executive of the business here in New Zealand. And I think what I'd just cover off quickly is a quick overview of our two core businesses in a little bit of detail. So we've got the networks business and we've got our solutions or contracting business, if you like. So for our New Zealand business, the core of it is the networks business, and it really has three core lines of business. We've got our traditional broadcast of television and radio services. Probably most famous, that's what the group's most famous for doing over the last 65 years, is delivering rich content to New Zealanders from our network of 400 sites around the country. More recently, in recent years, in preparation for Analogue Switch Off, that platform has been transitioned to digital, and people know that today as the Freeview platform. The Freeview platform has done, and Freeview itself has done an extremely good job of getting New Zealanders ready for digital switchover. Digital switchover is complete in parts of the North Island, all of the South Island, with the upper North Island, including Auckland, being switched off on the 1st of December. You can't miss the billboards, they're all around town, and we're really excited to be playing our part in freeing up that spectrum for the Crown to do the digital dividend auction, which I believe commenced today. Also in the New Zealand business, we're known for providing specialised networks, typically using our tower networks, and one of the best examples of that is our Maritime Operations centres in both New Zealand and in fact Australia. Kordia monitors nearly a quarter of the Earth's oceans for ships in distress. It is a safety of life at sea service, and it's a service that we're particularly proud of, and I will go into a little bit more detail of our maritime operations in a moment. And the third line of business is the first one there on the left, is our business telecommunications services. This is a more recent venture for the networks business, providing managed voice and managed data services to New Zealand corporates. And again, I'll go into a little bit more detail about how that business is tracking, because we're extremely proud of its success so far. For our consulting businesses or construction businesses, we operate in both New Zealand and Australia. And focusing on Kordia Solutions Australia, which, as David mentioned, is actually one of has the majority of the group's revenues now. That business has had tremendous growth and success over in that market. And today, Kordia Solutions Australia generates sales of greater than $200 million and has over 800 staff operating for customers such as Optus, VHA, and Telstra. And of course others, and David mentioned the APLNG project in the resources sector that we're extremely proud of. In New Zealand, we have a slightly more modest consulting or solutions group, which is approximately 90 people providing, again, telecommunications infrastructure services, but also smart infrastructure services in New Zealand from our bases across the country. So we're extremely proud of the work that we're doing here, including for our broadcast customers, getting them ready for Analogue Switch Off, which has so far gone extremely well. Talking of customers, they are the lifeblood of our business, and I thought I might take the opportunity to show a selection of some of the customers that we do work for. These are extremely discerning, challenging, and of course customers that set the highest standards of what they expect from a technology solutions provider. So we're extremely proud to work for a number of these customers and businesses and brands that many of you will know and have seen, and they expect a robust service. They expect reliability, and their telecommunications needs are always business or mission critical. So with that, it is an opportunity to talk about what for us is really the essence of Kordia. In a post-Auckland divestment world, for us it is around being a leading provider of business critical technology solutions. And on that journey, we're extremely proud with the work that we're doing. I said I would get into some more detail around our managed voice and data services, or our on-call service as we call it here in New Zealand. We're extremely proud of the work that's been, the growth that's been happening in that business. In fact, that business managed to achieve over 60% revenue growth in FY13, which is an outstanding result for any business. It is part of Kordia's broadcast to broadband transformation, and again, with over 60% growth, that's a massive leap forward in making sure that the business is able to replace those analogue broadcast revenues as they fall off and replace those moving forward into the future. Fonterra is obviously one of New Zealand's largest businesses, if not New Zealand's largest business, and providing voice and managed services to the likes of Fonterra, Burger King, Deloitte, Simpson Grierson, Becker. These are customers that sit very well with our mission of providing business critical services. So that positions Kordia well as New Zealand's only provider dedicated to business telecommunications services. I said I'd get into some more detail around our maritime operations. Between our Maritime Operations Centre in both New Zealand and Australia, as I said, a quarter of the Earth's oceans monitored for ships in distress. We're very pleased to announce that in FY13 we secured an extension of our relationship with Maritime New Zealand for another 10 years, which is the third renewal of that agreement. So again, Maritime placing extraordinarily great trust and care in Kordia's hands for the delivery of the Maritime Operations Centre. We're also going through a significant upgrade of the technology to further enhance safety of life at sea, and that is a service of which we're extremely proud of. The 10-year extension is an approximately $40 million contract. That is heartland stuff for Kordia, providing mission critical services. So with that, I will turn over to Sean, who will get into a little bit more detail on the numbers.
Thank you. Well, good afternoon, everyone. My name's Sean Randall. I'm the Group Chief Financial Officer. So as David said at the start, I'm going to spend just a little bit of time looking back at the year we've had at a glance and talking through perhaps some more of those numbers and putting some meat onto the bones, and then giving you just an overview of our business outlook for this coming year, 2014, before I then close up and we welcome any questions at the end that you may have from the session you've seen today. So let's look back at the last year at a glance and just go through some of those numbers. And I just want to reiterate some of the comments that our Chairman David said earlier on. We increased our net profit after tax by 46% over the prior year to 10.6 million for the business we still run today, and that excludes Allcon, which we don't report obviously anymore, having divested that last year. That was ahead of our statement of corporate intent by about $2 million, favourable to that, so we're very pleased with that outcome. And I know the Crown's all about getting excess surpluses and beating those budgets, so I'm pleased to say that Kordia's paid its part in achieving that for this last financial year. And as David mentioned, we met our dividend obligations and paid a $5 million dividend, which has already been remitted back to the Crown on the 30th of September. So we're very pleased for that. We've had a very strong year. We have had a year of change as we've divested a business, but I think we've still managed to perform, and the underlying business is certainly very solid for the year. Our revenue for the last year was 309 million, and it was up 3 million over the prior year for the operations we still have today. Some of the balance sheet stuff that David talked around and some of the metrics, I mean, with everything going on in the world, our gearing is now down at 36% at year end. At our half year, we were sitting at 46%. So that's a significant movement. Yes, the divestment of Allcon has helped with that, but that's the lowest level our gearing has been, well, I think in a very long time, and we were discussing it at the board meeting this morning about how low it currently is, and it's a huge area of focus for us, both in 2013 and obviously will be in the coming years. And you can see that in our net debt number there at just under 53 million at the end of June, the lowest it's been for the group since its inception actually in 2005. And as David said, in the GFC, peak of when the GFC hit in 2008, we were sitting at a net debt number of about just over $120 million. So we've paid down a significant sum of cash in the last 5 years through probably the changing of the structure, the implementation of the strategy that we have today, and obviously the divestment of the retail arm, which is Allcon. So, and also CapEx there at the bottom, the all-time low this year. Our CapEx this year, and David talked about some of the numbers, we spent CapEx of about $20 million for the year, and with the retail part divested now, it means our CapEx profile has substantially changed going into 14 and 15 because the retail side was quite capital intensive. We still obviously do spend capital to maintain our networks business here in New Zealand, but the profile of our CapEx has dramatically changed now as the group's got a new shape. So a really strong year for us, one we're very proud of, both here at Kordia. I know the board are very proud of it. Certainly senior management are very proud of what we've achieved. But that's looking back. It's time to sort of move on. 2014 is well underway for us. We're sort of just through the first quarter. We're still seeing in New Zealand a strong demand for digital TV and telco services, which is good. There's new channels and new content available. And you will see Al Jazeera, I think, launches on the 1st of November on Freeview, and there are other channels that will come on board during this year. So that's certainly a very pleasing side of our business, and will continue to grow. Offsetting that, obviously, as you know, 1st of December is the Analogue Switch Off. David talked around, it is a significant loss of revenue and cash for us. Roughly, it's about $12 million of profit and cash by shutting that off. We've known about it for a long time. We've had a diversification strategy that's been well underway with both Encore and digital TV in New Zealand to offset that, and we're well on the way to offsetting and mitigating those revenue streams. But the loss is a loss, and we're going to have to cope with that through 2014 with the lower earnings, particularly as we get through to the second half of 2014 with that close off. But again, offsetting that in the solutions business, we've got our diversification strategy. We've talked about APLNG, we've talked about the telco sector, and we're currently trying to look at expanding our service offering into the customer base of those customers. But there is competitive pressure out there in the marketplace. You've certainly seen in the Australian businesses over the last year, particularly driven from the telcos. I think with 4G offerings, there is a huge drive on getting costs down. The overall telco sector relatively is flat in terms of the industry's growth, and that puts a lot of pressure on cost. And we're certainly seeing that pass through as the competitors out there drive competitively to win business, and also the industry itself forces us to look at our cost base. So those are things we've certainly seen and we continue to see, and we manage our businesses accordingly on that. But the overall outlook for us is still very strong, and certainly as we go into 14, it's looking very positive. So really, I think in summary, we're very well positioned for the future. I've just put up there both our websites. I'd like to refer to them. There's a lot of information on both the New Zealand website for the New Zealand business and the Australian website for the Australian business, obviously. We're well placed. And I think we've certainly had to cope with the loss of revenues, and I've talked about that. We've got a diversification strategy that is bearing fruit both in New Zealand and Australia. The management feel very confident of the way the business is performing, and I think with the debt reduction that we've had in the group in the last probably 5 years and ongoing, it remains an area of focus for us. We're very well positioned for the future. And on that note, I'd probably just like to pass it around for any questions that you may have of David, Scott or myself, and open it up to the floor.
Thank you. Sean? Any questions? We're not allowed to, no board members allowed to ask a question. All the auditors.
So just a question on the diversification strategy. What will the business be looking like maybe in 5 years' time in terms of where are your assets and where are your revenues going to be coming from?
Yes, so I mean, for the New Zealand business, we're seeing quite strong growth happening on digital television. The shutdown of the analog broadcast network has actually breathed new life into television into this country, and we will see a great number of new channels launching over the next 6 months. But even beyond that, we see more growth in digital television than we've ever seen in this country for growth in television demand. So we'll have a significant part of our revenue and our assets dedicated to providing television services, digital television services. And then the second part for us in terms of that diversification is the Encore managed wide area network and voice service. So that's our telco product into corporates. Again, as I mentioned, over 60% growth in that area. Kordia has something different and special for customers that want a service which is business critical, mission critical, highly reliable, and that's resonating really well with the market. Obviously, that's a competitive space, and David mentioned both Vodafone and Telecom. They are key competitors for us in that telco space. Make no mistake, those guys are out to win, as are we, and we are a challenger in that market. But we are dedicated to business. We don't have a retail arm. We know how distracting a retail arm can be. So we see those two areas forming a key part of our diversification in the networks business.
Do you want to comment internet TV?
Yeah, I mean, I think that David's question was any comments on internet TV. I think that we see great demand for content moving onto the internet. I think we're already starting to see that happen with Vodafone recently launching things, and Sky, I think at their AGM, talking about some new products that they're bringing to market. And I'm hopeful that we'll have some interesting things to talk about on the Freeview platform in the not too distant future as well. The hybrid connectivity between the set-top box in your lounge and the internet connection coming into your house is inevitable, and Kordia wants to position itself to be taking full advantage of that.
So $1 each way.
And maybe just to follow on, in terms of Australia, how important a part of your business is that going to be 5 years out, or is it unknown?
Well, I'll jump in Australia. I think on the Australian business, we've successfully grown that business over the last 5 years. It's grown, from the extremely strong revenue growth certainly over the last 5 years. We're still a relatively small player compared to some of the size of our competitors. But having said that, if you look at the market there in the mobile industry with the upgrades that are going on both in New Zealand actually and in Australia to 4G and the consumption of content and data, you are going to see consumers more and more using their mobile devices and accessing more and more content, which will continue to put pressure on the network of every telco across the world. This is the challenge they've all got. And so that means for us, the opportunity, we design networks, we build networks, and we maintain networks. Well, there is a continuing challenge for all the telcos to keep up with the consumerization of the technology. We're all using more and more mobile devices every day. Some of us have now got multiple devices and are using them at multiple times. And I think that is a huge opportunity for us in the actual telco sector. And then our diversification strategy we talked about, into the energy and natural resources. I think people are saying it's slowing down, but what is slowing down? I mean, it's still a massive market in Australia. We're doing an APLNG project now, which, as you know, Carl, is a $100 million project over 2 years. There is more opportunities once you've got that to actually go and do others as the market grows. So there's still a lot of growth in the Australian market, despite what people are saying overall, the economy's slowing, etc. In the segments we're seeing, we're actually seeing quite a bit of growth still. And I think we can't predict the 5 years out what that'll look like, but ultimately 4G will be in and we'll all be using it soon.
And then the market will be talking about 5G, and then, of course, there'll be the inevitable upgrade path, and we want to be a significant player with the likes of Telstra and Optus and Vodafone Hutch in that growth over the next 3 to 5 years.
I think one of the key things for us was actually not to get deeply aligned with NSN. It's been interesting. It's a very tricky game if you rely on government policy that can change at the change of a government, and that's something we'll constantly wear off. So we're sort of fortunate there. It was very good for us. We are related to it, but we're not. It's not a big part of our business.
You didn't mention the ultra-fast broadband initiative in New Zealand at all. Is that an opportunity or a threat to your business?
It's definitely an opportunity. So for us, we're strong supporters of UFB. We think the ultra-fast broadband project in New Zealand is extremely well executed compared to what we're seeing in Australia, where there are different challenges. And for the New Zealand business, as I mentioned, our services into the corporate market, we see a future where we're only putting our customers on ultra-fast broadband. It's more reliable, it's cheaper, it's faster. There's no reason that we can see to not be a staunch supporter. In fact, funnily enough, today it is a differentiator. Maybe it shouldn't be, but it is, because we have taken a very proactive approach on not only retailing UFB services for businesses, but also wholesaling them to other carriers who don't necessarily have the network reach to connect everywhere. Yeah.
We're first to put pricing out, weren't we?
Yes.
Okay, any other questions? All right, well, thank you all very much.
Thank you.
You for coming, and I won't look forward to seeing you next year, but I know the board will. Thank you. Cheers.
Thank you.
Thank you.